at activity 3, right? So activity 3 is exactly the same as the activity that we've been dealing with in the previous videos. It's just that now what are we going to do? I'm going to show you how this activity, remember that in the previous activities we've been looking at the share capital note, and then in this activity we are going to do the retained income note, because remember your dividends will affect your retained income note. So let's go over the things that we had already filled in our share capital note. We had already filled in the share capital note, right, with the buyback, the shares issued during the year, and then we found the average price. Remember that for the price of the buyback, this 750, for you to get that 750, you need to calculate what? You need to calculate your average price, right? This is your average price whenever you are dealing with the buyback. And how do we calculate the average price? We calculate the average price of the shares that were issued before the buyback happened. So before we had a buyback, these are the shares that were issued. It's the 450,000 that was issued at the beginning and the 80,000 that was issued during the year. So those things happened before the buyback. So whenever we are trying to find the average price of the shares, we are finding the average price of the shares that were issued before the buyback. And before the buyback, we had the 450 and the 80,000 shares. So we'll go and find the average of those shares. So we take the rand amount of those shares, right, and we divide it by the number of shares, like we did here. We take the 3,215,000 from the shares at the beginning plus the 760,000, right, and we divide it by the 450 and the 80,000, and then the amount that you get, or the price that you get, would be your what? Would be your average price that you're going to use for your buyback in your ordinary share capital note. But then remember, with our shares repurchased, we have a total amount that we're going to pay over to whoever that we're buying the shares back from, and that total amount is split into my average price, which I just calculated, which will go to my ordinary share capital note, and my what? My price above average, which will go to my retained income note. And my price above average is simply whatever is remaining after I've deducted that 7.50 cents. Remember, the 10.40 is going to be made up of your average price plus your price above average. So if my average price is 7.50 and my total is 10.40, for me to get my price above average, I'm going to take my 10.40, which is the total that I paid, minus the 7.50, which will give me 2.90. And that 2.90 is what I'm going to take to my retained income note for my shares repurchased in my retained income note, right? So let's get into the retained income note. So the retained income note, right, it says that here's the format of the retained income note. We need to go and find the balance at the beginning of the year, right? So the balance at the beginning of the year for my retained income, I can find it in my financial records. So my balance at the beginning for my retained income, 322,500. So I'm going to put that there as 322,500. Then what next? The next thing that I need to go and look for is my net profit after tax, right? So let's go and read our information and see. So in my financial records, I can see that they gave me the net profit after tax to be 812,700. And remember, if they didn't give it to you, but they gave you the income statement, that's where you'd go and find it, right? So 812,700. Then the next thing would be my repurchase of shares. Remember, how many shares did we repurchase? We repurchased 75,000 shares. They told us that we repurchased how many shares? We repurchased 75,000 ordinary shares, right? So I'm going to go to my retained income note. Then I'm going to do brackets for my calculation. 75,000 shares, right? Then at what price per share? Remember, I said your total is split into average, which is 7.50, which is taken to where? It's taken to your ordinary share capital note, and then whatever is left over, which is the 2.90, will be taken to your retained income note. So this 2.90 is what we take to our retained income note. So there, those 75,000 shares times 2.90. So now I'm gonna say 75,000 times 2.90, which is going to give me 217,500. And remember, your buyback is always in brackets, right? Because it's minusing from your retained income. Then my ordinary share dividends, right? So this video was for how to deal with my dividends. So my dividends, right? How do I deal with my dividends? My dividends will be calculated on the number of shares issued, right, by the time the dividend is declared or paid. Is declared or paid. So what do I mean? We need to go and see, okay, this is my financial year, right? My financial year ends on the 28th of Feb 2021. It would have started on the 1st of March 2020. So the first thing that I need to understand is when the dividends were declared. So I'm just going to do a brief example, right? Then we're going to go and do it correctly. So the first thing that I need to understand is when the dividends were declared. So let's say my dividends were declared here around the 1st of November 2020. Right? Here my dividends were declared or paid. Right? So this is the date that my dividends were declared or paid. So what I need to go and figure out, for me to be able to do the calculation of how much my dividends were, I need to find out by the dates that the dividends have been declared, how many shares did I have in issue by that date, right? So at the beginning of the year, let's say we issued 100,000 shares, right? 100,000 shares. Then during the year, maybe on the 1st of September, I went and issued a further 50,000 shares. So if I want to find out how many shares did I have issued by the time that this dividend has been declared, or how many shares did I have issued at the time that the dividend is declared. So by the 1st of November, how many shares has the business already issued? I'm going to look at this part of the year. So I'm going to look from the beginning of the year up until the date the dividends have been declared. How many shares did I have in issue? And I can see that I had issued shares here at the beginning. I also issued shares in September. So in total, by the time that the dividend has been declared, I have, well, how many shares issued? 150,000 shares. And those 150,000 shares is what I'm going to use to calculate my dividend. Remember, they tell you that a dividend is declared at 40 cents per share or at 50 cents per share. If it was declared at 50 cents per share, now I'm going to say times 50 cents. And the answer that I get there would be my what? Would be my dividends declared that I'm going to take to my retained income note. Right? So now let's do it correctly and see. Then before I even get to that, it's also important that you understand if those shares qualify or don't qualify. So, for example, if they said the shares that were issued on the 1st of September do not qualify for dividends, what would that mean? That would mean that, remember I said when you're calculating the dividends, you are counting the number of shares that the business had issued up until the date the dividends have been declared. And we said that the dividends, the shares were 100,000 and this 50,000. So by the 1st of November, the business had issued 150,000 shares. But if they say that these shares do not qualify, this means that in my calculation for the shares that I said the business has issued, if these 50,000 shares don't qualify, I will not include them as shares that have been issued. I will only include the 100,000 that was issued at the beginning of the year. So here I would have 100,000 shares instead of 50,000 shares. So that's what it means when they say shares do not qualify, right? It means that you don't include them in your calculation for the number of shares that the business has in issue up until the date of the dividends, right? Okay, so now let's do this properly, right? Let's do this properly and understand with this specific question how many shares had been declared. So I'm still gonna write down my financial year, right? And then I'm gonna fill in all my information. So 28 Feb 2021, the 1st of March 2020, right? So now let's go and see. So remember, at the beginning of the year, I know that I had shares worth 450,000 shares that were issued. So I had 450,000 shares at the beginning. So let me just write it properly. 450,000 shares at the beginning of the year. Then during the year, I went and issued how many more shares? I went and issued 80,000 shares. So let's just go and check for the date for the shares issued during the year. So they said that on the 1st of November 2020, we issued a further 80,000 shares. So somewhere along here on the 1st of November 2020, right? 1st of November 2020, we went and issued more shares. We issued 80,000 more shares, right? Then when is the dividend being declared? Let's go and read. They told us that on the 27th of February, a final dividend of 40 cents per share was declared. All shares, including the new shares issued and repurchased, qualify for final dividends. So we don't need to exclude anything because all the shares qualify. If maybe they said the new shares that were issued do not qualify, then I need to exclude them from my calculation. So because all of them qualify, I don't need to exclude anything, right? So they said on the 27th of February, so somewhere here, right? 27 February 2021, the dividends are declared the dividends. So the first step in calculating my dividends, I need to go and find out by the time that my dividends are declared, how many shares did the company have in issue. So by this date, how many shares did the company have in issue? So I obviously look from this side going that way to see how many shares did the company issue by the date that the dividends are declared. And I can see that the shares were issued at the beginning and the 1st of March 450. Then we issued more shares on the 1st of November 2020, 80,000. So by the time that the dividends are declared, I had 450,000 plus the 80. I had 450,000 plus the 80,000 shares, right, that were issued before or by the time that my dividends are declared. And how many shares in total would that be? That would be 530,000 shares. So it means that my calculation on the dividends will be based on the 530,000 shares. So now for me to find out my final dividend amount, I take the 530,000 shares, right, and I multiply it by the rate that they've given me. They told me that the dividends are declared at what? At 40 cents per share. So I'm going to times that by 40 cents, which is 0.4. Then if I times that by 40 cents, that would give me 212,000. So these are the dividends that were paid to my final dividends that were paid to my shareholders. So I'm going to go and say final dividends 212,000. Then there was no interim dividend, so there's nothing there. So my total dividends that were declared are 212,000. And then remember that your dividends are a minus, right? So now what I now need to do is I need to find my balance at the end. And now how do I find my balance at the end? It's obviously your beginning plus your tax minus your repurchase minus your ordinary share dividends to give you your balance at the end. And that would be 322,500 plus my 812,700 minus my 217,500 minus my 212,000, which would give me 705,700. Okay, then be careful over here, right? Be careful over here to not double count. Remember that this part here, you total it here on top. So you only take the top amount and you don't take this these amounts here, because this amount is the total of these amounts over here. So you don't go and say minus 212 minus 212. You only take the total to get to your balance at the end.